Want to know the top 6 Fidelity ETFs? Well, as you know, Fidelity is known for its research-driven approach, aiming to provide strong returns and value to its investors. Today, we will be looking at 6 of their top-performing ETFs: the Fidelity MSCI Information Technology Index, the 1Q Fidelity Nasdaq Composite Index ETF, the Fidelity Enhanced Large Cap Growth ETF, the Fidelity MSCI Consumer Discretionary Index, the Fidelity Enhanced Large Cap Core ETF, and lastly, the Fidelity MSCI Industrials Index ETF. Stay tuned as we delve into each of these ETFs, one by one, with a verdict of the best-performing fund at the end, so sit back and enjoy. First on our list is the Fidelity MSCI Information Technology Index, or FTEC. With net assets reaching a whopping $9.6 billion, FTEC has proven itself as a strong player in the market. Over the past decade, it has achieved total returns of 20.15%. Let's delve into the backtest results, shall we? From an initial balance of $10,000, FTEC has grown the final balance to a staggering $64,041. That's an impressive compound annual growth rate, or CAGR, of 19.86%. It's also weathered the market's ups and downs, with its best year yielding a 53.3% return and its worst year seeing a reduction of 29.59%. FTC's Sharpe Ratio stands at 0.98. demonstrating its potential for high returns in relation to the risk taken. A strong contender in the tech sector, FTC is definitely an ETF to keep an eye on. And next up, we have the 1EQ Fidelity Nasdaq Composite Index ETF. This ETF boasts a substantial net asset value of $6.1 billion, and its 10-year market total returns are an impressive 15.80%. Now, let's delve into the backtest results. Beginning with an initial balance of $10,000, this ETF has shown a remarkable growth, ending at a whopping $43,503. The compound annual growth rate sits at a robust 15.42%. The best year for this ETF saw a return of 45.74%, although the worst year did experience a drop of 32.12%. Despite this, the Sharpe Ratio of 0.81 and a Sortino Ratio of 1.32 indicate a good risk-adjusted performance. With impressive returns and a strong market correlation, this ETF is a solid choice for any investor. Third on our list is the Fidelity Enhanced Large Cap Growth ETF, or FELG. This ETF has been a noteworthy performer in the Fidelity lineup. With net assets valued at $2.4 billion, it's a substantial player in the large cap market. Over a 10-year period, FELG has demonstrated consistent growth with a market total return of 15.13%. This indicates a steady, long-term appreciation that's a key characteristic of large cap growth funds. FELG's portfolio is primarily composed of large US companies with a strong potential for growth. These are typically industry leaders and innovators, and they're selected based on factors like earnings growth, sales growth, and momentum. FELG aims to provide investors with capital appreciation, making it a suitable choice for those seeking to invest in the long-term growth of large established companies. If you're looking for a large cap growth ETF, FELG is worth your consideration. Next, we have the Fidelity MSCI Consumer Discretionary Index, also known as FDIS. This ETF is a fascinating one. With net assets amounting to $1.5 billion, FDIS has proven its worth in the market. Over the past decade, it has offered total returns of 13.29%, a figure that certainly catches the eye. Now let's delve into its backtest results, shall we? Starting with an initial balance of $10,000, FDIS managed to grow that investment to a whopping $34,030. That's a compound annual growth rate of 12.69%. Despite a standard deviation of 20.43% and a maximum drawdown of 35.23%, FDIS has maintained a Sharpe Ratio of 0.62 and a Sortino Ratio of 1.05, indicating a decent risk-adjusted performance. With a strong performance in the consumer discretionary sector, FDIS is an ETF that shouldn't be overlooked. Last but not least, we have the Fidelity Enhanced Large Cap Core ETF, or FELC, and the Fidelity MSCI Industrials Index ETF, or FIDU. The FELC, with net assets of $2.4 billion, has demonstrated a 10-year market total return of 12.86%. This ETF provides exposure to large capitalization US companies, emphasizing those that are geared for growth. On the other hand, FIDU, with net assets of $1 billion, has shown a 10-year market total return of 11.33%. This ETF tracks the MSCI USA IMI Industrials Index, which represents the performance of the industrial sector in the US equity market. In terms of performance, both ETFs have shown remarkable resilience and growth over the past decade. The FELC and FIDU are not just investments, they're opportunities to be part of the growth of large cap companies and the industrial sector. Both FELC and FIDU offer solid returns, making them strong contenders in any diversified portfolio. So there you have it, the top 6 Fidelity ETFs. We've journeyed through the realm of the Fidelity MSCI Information Technology Index, with net assets of $9.6 billion and a 10-year market return of over 20%. We then navigated the Fidelity Nasdaq Composite Index, boasting $6.1 billion in assets and a 10-year return of nearly 16%. Our exploration continued with the Fidelity Enhanced Large Cap Growth and Enhanced Large Cap Core ETFs, each with net assets of $2.4 billion and substantial 10-year returns. We also delved into the Fidelity MSCI Consumer Discretionary Index and the Industrials Index ETFs, both excellent options for diversification with their respective net assets and consistent returns. The best performing fund was FTEEC for its compound annual growth rate and long track record. The key to successful investing lies in diversification and informed decision-making. So keep these ETFs in mind as you plan your investment strategy.